Yeah, so I guess just to start, why did you get into a career in mortgage lending? What's your mortgage loan officer is probably your title, right?
Yep,
Yeah.
yep. Mortgage loan officer, got in almost 3 decades ago. And I started in real estate. I got my real estate license and really just, I think I enjoyed like more of the financial side of it. And so I,
Mm-hmm.
I was in Colorado when I got my real estate license. And then when I moved back to Texas, I went ahead and started getting it. I got into banking and really enjoyed the financial side of it. And I really enjoy helping people get creative with financing and see what the best fit is for them to
Yeah.
get them in a house. It's really super rewarding.
Yeah.
And I
Now,
love working with real estate agents too. I mean, it's great. I get to work with real estate agents. I get to work with first time home buyers, fifth time home buyers, whatever it is. It's just
yeah.
it's always changing.
Yeah, that's
I
awesome.
love it.
Um, yeah, that's great. If someone's looking to get into the career, like, did you have a mentor when you started? Is there any advice you have for someone looking to start?
I just I mean, I started back in the day when there were no income, no asset loans, and,
Wild
really
West.
some the Wild West. So, I really kind of learned on my own. So I do think it's important to try to find a mentor just to certainly at least give you an overview, but to get into this business, at least on the independent mortgage banking side or the broker side, you have
Mm,
to get your license. So if you work at a bank or a credit union, you don't need to have a license, but if you are an independent mortgage banker or a mortgage broker, you actually have to pass an exam,
yeah.
do continuing education every year. So I think that really helps you if you take that exam. It's a great way to kind of get an overview or some basic knowledge about the business, and then maybe partner up with a loan officer who is seasoned
Yeah.
for sure.
Is there any major differences from Texas to here, or
The laws are different.
just different laws?
Yeah, I'm licensed in New York, New Jersey, Florida, Texas, South Carolina, Massachusetts.
Hmm.
So several states, and they're all different. When you get your license, probably similar to real estate, Ryan.
Yep. Yeah.
You're going to have to understand the laws of each state.
Hmm.
So yeah, but yeah, it's a little different. In Texas, there's some pretty quirky rules, but New
Hmm.
York is unique too.
Yeah.
There's not a whole lot of banks and lenders that are outside of New York that actually lend in New York because it can be a difficult state and
Yeah.
take some time to get licensed.
A lot of regulation, a lot of more eyeballs on what's going on.
Yep.
Same thing for real estate. It's kind of a lot of people. It's a industry that's been around a long time, so
Yeah.
heavily regulated. But
Mm-hmm. For sure.
so your company, Go Rascal.
Mm-hmm.
I know you've had some different companies. You had your own company before. What do
Mm-hmm.
you like about Go Rascal, and how's it been working for them?
Well, I mentioned being in the business for almost 3 decades. That's a long time, and during that time, I've owned my own mortgage business. Was a correspondent mortgage lender, not a broker. In other words, you just use your own warehouse line to fund your loans, and you don't really need to disclose how much money you make on the loan. But you're offering retail interest rates. And whether you're at a bank or an independent mortgage banker, you offer retail rates, which are higher than at a mortgage broker. Those are wholesale rates. So it's just similar to when you go to a store and you're shopping, you buy wholesale or retail, which one is typically lower? It's going to be wholesale.
Yeah.
So I made the decision recently to work with Go Rascal. They're New York's largest mortgage broker. And I chose them not because of their, that is the case. I chose them because they have great leadership, and really they're not here in the capital region, and I thought it would be great to pardon me, open up an office for them and help them build and grow their brand in this region.
Mm-hmm.
And I enjoy doing that as well as a regional manager / senior loan officer. So, but most primarily, the biggest reason for the change, Ryan, is because I want to be able to pass on lower rates to my clients,
Mm-hmm.
offer more products, and quite frankly, the service is about 2 weeks faster than a bank or mortgage banker. So I love closing loans quickly.
Awesome.
That's the main reason.
Yeah.
Three main reasons.
So yeah, let's get into that. What
Yep.
what type of products do you guys offer, and then Also, if you could just break down sort of the common loans for most people that are kind of looking to buy their first house.
Yeah, I mean, about 80% of consumers out there are fitting into the traditional mortgage products, conventional or government type loans. So, conventional, you have the guidelines that are basically determined by Fannie Mae and Freddie Mac, two major government agencies that, when clients have to send in page 3 of your bank statement, even though page 3 doesn't have anything written on it. That's where those guidelines come from. So it's a pain in the rear getting I would say the documentation is probably the worst part.
Yeah.
But about 80% of the loans are done conventional, FHA, USDA, and VA, basically any government type loan program. And then with FHA, you can have a renovation loan, which is a 203K. And then on a conventional, it's a home style renovation loan. So the majority of the loans are done that way. And then there's non-agency, or what I like to refer to them as non-qualified mortgages, non-QM. And those are for your clients that are maybe investors who, have just started getting into investment property, or maybe they're self-employed and their tax returns don't quite reflect what they make, but they've got a lot of write-offs, so that can become a challenge. And maybe we just want to utilize their bank statements, which are just their deposits over the last 12 or 24 months. And we just divide that out by 12 or 24 months and those deposits, and that's their income we can use. So there's some pretty now with those come typically higher interest rates. They're considered higher risk loans. But those are great for investors and self-employed folks. And you typically need to be at least 2 years self-employed to be able to qualify for those.
Gotcha. Is there, what's the down payment?
Down payment, 15%.
15%?
Yep.
Okay,
Yep.
cool. And then, for the FHA, USDA, VA, they're all pretty lower down payment loans.
Lower
for the
down
most part.
payment. Yep. Allow for some flexibility with credit scores. Each one is kind of different when it comes to what they allow credit score wise. But all great products. I mean, it just really, and then conventional has low down payment as well. We just recently at Go Rascal have launched a 1% down conventional loan. And the reason why I love this loan program is because a lot of sellers right now want to see conventional financing. I don't know. I mean, they're probably paying a little bit of attention to the down payment too. But if they have two offers and one is FHA and one is conventional, and we can talk why that is. But most sellers would rather go with that conventional buyer.
Yep.
So this 1% down payment program is awesome. Essentially, the buyer has to meet 80% of the area median income. And so, which is, you can find that on Fannie and Freddie's website. But basically, as long as you income qualify, you can put 1% down, and we'll give up to $4,000 towards the buyer's closing costs and down payment.
Wow.
So yeah, it's pretty sweet loan.
That is pretty awesome. Yeah, I don't know of anyone else doing anything like that, but that's pretty cool.
It's pretty cool.
Yeah, and I mean, multiple offers is everything right now, it seems like, in the capital region market in general. So from an experienced listing agent, what I tell my sellers is cash, conventional are usually the top two, just because of the less restrictions on appraisals and less underwriting to do, basically. But so just less risk at the end of the day. But so if you can get conventional on your mortgage contingency line, then it's going to give you
a way to go, right?
Yeah.
And on average, whether it's FHA or conventional, but at Go Rascal, I talked about speed earlier, Ryan, and I think, on average, from the time a loan is submitted, a customer's file is submitted to our processing team, to the time we're clear to close, we're 13 days. That's the company average. My personal average is 9.9 days. So that's a really fast. That's almost as quick as cash, and that's ordering title, appraisal, everything. So we're moving along very quickly.
Yeah. So I mean, that's like crazy. That's light speed compared to the rest of the industry. So what gives you guys that turnaround ability where other companies are taking a month just to get commitment.
Yeah, that's a really good question. We work with a company. It's called United Wholesale Mortgage. That's the lender that as a broker we work with. They're actually the number one lender in the country. I just went there and saw their facilities. It's amazing. It's like a city within a city. They close about 35,000 loans a month, and they're just a machine. They're doing same day underwriting. You submit conditions, they clear it right away within hours. It's just really extremely fast, and we're setting up our files to be successful at the very beginning. So I'm trying not to condition our customers with a lot of things that we need once it comes out of underwriting. So it's just a really fast process, and just with relationships that I have with attorneys, depending on who the buyer's attorney is, can oftentimes dictate how quickly we get title. But the attorneys that I work with, if they ask me who they should use, I usually, will recommend an attorney that can get that title really quickly, typically within a week.
Okay.
Yep.
Yeah, that's amazing. And yeah, for people that don't know, a typical transaction is month and a half, 2 months. To close, and then clear to close is usually given, maybe a week or week and a half out before the actual closing. So, yeah, if you're closing in 2 weeks or less than 2 weeks, that's a game changer for sure. So for people that are looking to apply, what are some of like the general criteria that you use and a lot of banks use to kind of qualify people? And what can they do to kind of improve those numbers if they are low in one or the other?
Yeah, I mean, I think, anytime I'm talking, especially with first-time home buyers, is stability is the one word that comes to my mind. Yeah. So stability with respects to your job, how long you've worked at your job, if it's been a short period of time, for the last 2 years, have you been in that same line of work? Are you full-time? Are you part-time? So stability with respects to your job and your income. In other words, if you're working on average 35 hours a week or 40 hours a week, we want to see that you're working those number of hours for the last 2 years. If it fluctuates, it becomes variable income, and you start averaging out income, and it gets really tricky with qualifying. Gotcha. So, and then just your job itself, ideally you want to be at the same job for a couple of years. But if you make a job change, then we're going to be paying attention to the line of work. Are you going from one type of industry to a completely different industry? Now, unless you've just graduated from college, and we would typically get transcripts, and you just started a job a month or two ago, that's perfectly okay, actually. That's not a problem at all. We just have to prove that you've been a full-time student. Ideally, we like to see that the job is in line with what your studies were in college as well.
Makes sense.
Yep. And then that's and credit, same thing. Yep. When it comes to credit, we're looking for stability as well. First-time home buyers may be a little younger sometimes, so you may not have much established credit, but the credit that you do have, we want to see that you've been paying on time, at least one trade line, a credit card, a car payment, paying for at least 12 months, then that would be a good time to start the process. If you have no credit history, it gets really tricky. It becomes what we call a manual underwrite, and you can get a cosigner, but it can get trickier.
Gotcha.
Okay.
So yeah, credit, history, and income.
Yep, and assets. So that's kind of the last part of it. The assets, we're typically looking to make sure that you've had a bank account and you don't have any large deposits in there, like cash deposits. A lot of first-time homebuyers especially don't understand that if you have $2, $3, $4, $10,000 sitting in a safe at home, and you take that money and put it in your checking account, when it comes to qualifying you to have enough assets to put down towards the purchase of your home, we actually have to back that out. We can't consider cash deposits as eligible funds. I mean, you can use them down the road, but we can't document them as funds that can be used for closing, and that can get really tricky. So I would just say, if you have cash at home, and you want to ultimately down the road use that to buy a house, go ahead and put it in the bank, put it in a savings account. This way it's seasoned 60 days or longer in that account, and we don't have to run into any issues down the road on that.
Yeah, that makes sense. No mattress money.
Right.
Or burying it in the backyard, nothing like that.
Exactly.
So do you see people is there common mistakes people make or common problems that kind of occur when
Yeah, I
you're
think the cash is a real big one that comes
cash?
up
Yeah.
often. Because people think cash is king, and cash is great. There's no doubt about it. But when it comes to buying a home,
Yep.
everything has to be documented. So that's a common one.
Mm-hmm.
Obviously, large purchases. Make sure that once you go under contract on a home, you're not trying to incur any new debt, or you don't go out and try to buy a car or buy furniture for that new house. I would just say keep everything as it is.
Mm-hmm.
And if you do need to, you're coming up on a lease that's ending, something like that, I just recommend speaking with your mortgage advisor to make sure the payments are going to be in line with your qualifying ratios.
Mm-hmm. Yeah, that's whenever I get something under contract, I'll tell people to, not go buy the new furniture yet. Don't go put a car under. Wait till it closes, then you can go do that stuff if you really want to.
Yeah, 100%. Yeah. And I would say the other one is when it comes to getting that pre-approval at Go Rascal, we do soft pulls, plus we do a hard credit pull.
Mm-hmm.
And the difference is a soft credit pull does not hit your credit score at all.
Mm-hmm.
But yet it still gives us the ability to make sure that your score is where it needs to be and your credit history is where it needs to be to qualify you. And then once you go under contract, obviously we would have to do a hard pull.
Gotcha.
But we don't want any surprises there. So if you're working with a lender and they're doing hard credit pulls, I would think twice about that.
Okay.
And maybe work with a lender that can do a soft pull instead.
Gotcha. Yeah, that's great. I'm not sure. I'm curious to hear your answer on this one, but do you have like a favorite deal you've done? There's a lot of different reasons why it could be your favorite, not always because it, makes the most money, but
right.
Is there anything coming to mind when I
Yeah,
say
it's
that?
really hard because doing this for almost 3 decades, and I would say maybe not specific deals. I don't want to offend any of my clients that are out there that I've helped, because they're all excellent and they're all awesome, and I'm humbled and blessed to have everybody's business that chooses to work with me and my team. But at the end of the day, really, helping first-time home buyers is super rewarding. I like to go to the closings whenever I can, and just seeing them get their keys for the first time and buying their first house, and how their faces light up. I'm getting goosebumps now talking about it. I think not that, buying your second or third house or investment property isn't a really big deal too, because it's all super awesome and exciting.
Yeah.
But I would say overall, what is really rewarding to me, especially, is helping the first-time home buyers.
Yeah. No, it's awesome. Same for me. It's just a little bit different, when it's the first time, and if someone does it a few times, it kind of loses that spark a little bit. So
yeah, very much more transactional.
Yeah, it's much more just been there, done that. Let's just get in the house and get done. Yeah,
exactly.
Yeah. So I was going to ask you the same thing about your worst deal. Again, you don't have to get specific or anything. But yeah, what was your worst deal, if you can recall one, and what did you learn from it?
Yeah, I recently just had 2 clients who are, they're buying 2 separate houses. They're going through a divorce. And they're buying 2 separate houses, and they have to sell their home, and they got under contract on their home. And they were under but they had to sell that home so they could split the proceeds and each buy their new homes respectively. They were clear to close 3 weeks in advance of closing, so we were sitting there ready to go. But their buyers, whom I was not doing the financing for, and I'm not going to mention who was, but they went 2 months, and ultimately the loan was declined, and it was very traumatic on them because they're going through so much right now. Just both of them are really great people, and I just and they lost out on those 2 contracts for their purchases and are having to start the process over. And in this market, that's a really difficult thing to have to do. It's hard. It can be challenging finding the house in the first place, and then they have to do it twice. So I would say that one has kind of been. I feel really bad for my clients in that case.
Yep.
So, yeah.
Yeah, one of the unfortunate things about real estate is there is that due diligence period where a lot can happen, and a lot can go wrong, unfortunately. But
Yeah, a lot of moving parts for sure.
exactly, yeah. And yeah, I was trying to think how many parties are actually involved in just one deal. And when you talk about inspectors and agents and attorneys and banks and their attorneys,
Appraisers.
yeah, I mean,
Yeah.
it's getting up there for just trying to juggle all these things together. But
Yeah, and you imagine as a first-time home buyer, like
yeah,
trying to put your hands around all of that and
yep,
really grasp all of that. And that's why I think just having a good team,
yeah,
working with a good team, is super important because we can just kind of take it one step at a time because it can be very overwhelming.
yeah, yeah, absolutely. Shifting gears a little bit, curious if you have a favorite tool or app, or is there anything you use kind of on a daily basis that you couldn't live without, or just makes your life like a lot easier? Like for me, I know for real estate, it's the MLS. Does a lot of the groundwork for agents. And then just in my personal life, I use my notes on my phone like
I do too.
nonstop.
I use that a lot too. Yeah.
So like those are two things I wouldn't be able to, live without, I think, for work and just for personal
Yeah.
note taking, or even work note taking.
Yeah, that's a really good question,
Yeah.
and it could help other folks, kind of, know as far as tools go. I would say, I mean, at Go Rascal, we use Slack a lot.
Yeah, just started using that actually.
Really?
Yeah,
And
it's pretty sweet.
it is. I really enjoy it. And we also use a Facebook page just for our group. As far as a tool for helping me with my clients, just our loan origination software is fantastic. Much different than what I had as a mortgage banker. And it's so much more user friendly, and I think it also helps speed things up. So when a client applies for a loan, it's just a really super easy tech that we use to do that pre-approval. So definitely that the Slack, I would say the Slack app, and then I use a tool called Hit 'em Up, which is a free app that you can text. For anybody that is open to and opting into texting, I can text my clients quickly. Hey, this is what's going on with rates, or
Yep.
and it can quickly get that out to them, and so they can make a decision pretty quickly, and I don't have to do multiple texts, so it's really super efficient.
Awesome.
I really like that app, and of course my calculator. Can't do it without my calculator, man.
iPads don't have calculators on them.
Yeah.
Why
really?
is that? I don't know
Really?
why. Yeah.
Huh, the Mac does and our phone does, right? But
Yeah.
the iPads don't? Interesting.
The
Well, I
iP-
use the
yeah.
Qualifier Plus calculator. It's a really great tool for
Oh, sweet.
mortgages and stuff. So if you ever, if you want to use that one, I highly recommend it. It does
Okay.
amortizations and stuff. It's great.
Awesome.
Of course, Zoom. We're all using Zoom now,
Yeah,
right?
and
So
Zoom is definitely one of the biggest game changers of just work-related anything,
Yeah.
I think, over the past 5 years. But, yeah, that's awesome. But, yeah, for whatever reason, iPad doesn't have a calculator.
interesting.
Don't know why.
I didn't
but,
know that.
Yeah, well, that's great. In the home stretch here.
Yeah.
So you mentioned, updating rates, sending that out to your database. Is that like the number one thing you think that, the number one question you get is how are the rates looking? Where are the rates going?
Yeah, I
Yeah.
mean, I get it from maybe more seasoned, folks that have bought and sold a couple of times. Real estate agents typically just like to have their thumb on where rates are because I think my realtor partners get asked it quite often.
Yeah, definitely.
But that question is almost like asking a listing agent, like, what can you list my house for?
Yeah.
Without you actually seeing it and, going and touching and feeling and getting a feel for, the neighborhood and that type of thing. So I always, if I could, do anything with respect to rates, I mean, rates may hover around 7.25 right now on a 30-year fix, but at the end of the day, there's a way to get 6.5 or 6 5/8, or if you get FHA, your rates would be lower sometimes than even on a conventional loan, depending on credit scores. So, I think that rates are certainly important, but, You have to, all of those other things we talked about with stability
Mm-hmm.
kind of play into those rates. So,
Yeah.
and as a broker, as a mortgage broker, generally speaking, we're about 0.5% lower than retail banks and mortgage bankers, which is significant on conventional lending. And on government loans, we're nearly a full percent lower in interest rate
Wow.
than an independent mortgage banker or a bank. So, highly recommend. Mortgage brokers are kind of a growing industry, and especially now where because rates have come up.
Yep.
So consumers are like, wait a minute, I can go over to a broker and get it cheaper. There's a lot of folks that are kind of transitioning, loan officers that are transitioning out of being a mortgage banker into the broker channel because they're starting to understand that, and they want to be even more competitive, and they can get extra. Obviously, if you can offer your clients lower rates.
Yeah.
So.
No, that's awesome. And you mentioned, the rates for fixed. I've seen like the adjustable rate kind of make a comeback lately in order to get people, the lower rate that might not be out there right now.
Right.
Can you talk about the difference between fixed and adjustable rate?
Yeah, I would caution people when they do that. I think a lot of, especially banks, are selling ARMs because their fixed rates aren't as competitive. So I would just make sure that that consumers that are out there that are looking at that they're getting because it's going to cost money to refinance, and if rates, if they're thinking that they're being told that rates are definitely going to go down. No lender has a crystal ball.
Yep.
Nobody knows what's happening with rates. Anything can happen, and rates can go up, rates can go down.
Yep.
So at the end of the day, you're dating the rate right now. You truly are, and you're marrying the house, right? So I would still encourage people overall, over a 30-year average, 7% rates are fine. When I bought my first house, it was 8.75%.
Yep.
So I think anybody who's been in the market for 8 years or less, or a real estate or loan professional for 8 years or less, they're going to try to push ARMs and think ARMs because they're still stuck on these 4% rates and 5% sub 6 rates. But the reality of it is that very well may not be what's best for the customer. So my opinion on it is maybe for somebody that's only going to be owning their house for 3 or 5 years, that might be a very good fit, or probably will be. But if you really truly are looking to hold on to real estate for a longer term, that's not a good solution.
Yeah, no, I completely agree. So I know you mentioned no one's got a crystal ball, but if you had one, because it's a question I get in the real estate market a lot, and it's so hard to actually say. But, in this hot market, it's very similar to what it was 2020. And then the rates kind of went up after that hot seller's market. Do you think something like that could happen again where rates might fly up again, or?
It's a difficult question.
Yeah.
My concern is if we see rates drop too quickly. There's already an issue with inventory in the real estate market. So if you see rates drop quickly, it's going to bring more buyers to the table, and it's going to make it even harder to find homes. And I don't know that that's going to really help the situation. And then you're just going to see quick inflation. You're going to see rates just jump right back up again to try to curb inflation. So I hope to see rates take over maybe a 6 to 12 month time steadily, maybe start to come stable out, or then even maybe come back down slowly is my hope. And then while that's happening, we see a little bit of loosening with the market, more inventory. Maybe prices may come down a little bit. Not so much over asking, for example, just getting asking.
Yep.
And I think once that starts happening, things will be in a better place. But it's my guess would be, this is just a guess, 100%. But based on, economics, I would say probably 6 to 12 months. We're going to have to kind of hunker down, and we're still going to be dealing with, a very competitive market and inventory, but we might see some things loosen up a little bit.
Yeah, I think inventory is definitely the main driver right now of just the competitiveness and difficulty for buyers. And just some real world examples. I've had some clients I've put offers in for, and we've gone generous terms over asking sometimes over 50 over asking just to get it, and have still lost out on it. So
Crazy. Yeah.
it is reminiscent kind of the last peak we had, but yeah. So whatever happens, I think the inventory's gotta change, and yeah, hopefully
I
that
think so
happens
too.
soon. But
Yeah. And I don't think, rates are going to help with that. Like, I don't think it's going to really just be based on the inventory
Yep.
and, people getting comfortable with where we are with the rates. And they need to. I mean, quite frankly, this is a more normalized, rate based on history. So
yeah,
I would not be, if I was a buyer, what I would not be doing is sitting and waiting for rates to go down.
No.
I would not do that. I would just focus on your payment. Make sure that you're comfortable with the payment. You're not getting too much into a house. Good news is if rates go down, then you can refi. But if they don't, you got into a house. Because I don't really see, quite frankly, like homes what do you think? I don't really see homes depreciating. Like, our market has been so stable for so long, at least in this market. It's not Denver, it's not Dallas, it's not Vegas, California, Florida. It's a pretty unique market, and we've always been really stable.
Yep.
So I think these appreciations, I believe the homes will hold their value.
I think
hold their
so.
values pretty well.
I think we'll just see a flattening out. Sort of. Maybe they won't get 10% every year. Maybe they'll slow back down to like 2 or 3 or right around there. But yeah, I do think this is like one of the more stable markets, just from the state jobs and kind of industry and campuses for universities, and it's all kind of intermingled together in the area, which kind of gives it a steady Eddie almost, with still a little bit of upside. So
which makes it a really great time and location to invest, to buy real estate. So
yeah, absolutely. All right, that's it.
Awesome. We clap again.
Cool. No, that's it.